Okay, so a few more of you joined, so we'll start the session now. So hi everyone, welcome to this webinar looking at tenants' options when it comes to dealing with non-negotiable landlords. I'm your host, Susie Bearne. I'm a freelance journalist for the likes of The Guardian, the BBC. I'm also a media consultant and media coach. So let's begin with a bit of a question from, I suppose, each of our panelists really. So you're all working with businesses kind of across the board. What kind of struggles are you hearing from small businesses right now? Perhaps if we start with Anthony first.
Well, it's not just small. It's small and large businesses. It doesn't matter what size the business is. We've seen loads of companies go to the wall. The government brought in a moratorium in March of this year when they saw that the coronavirus was hitting these shores. And the moratorium was brought in essentially to get landlords, tenants and landlords bankers who have been somewhat invisible for the last 7 or 8 months to try and find solutions as to how tenants can pay rents when they haven't got any income. We started in March going to landlords saying that restaurants, bars, clubs, etc. are closed. The landlord's initial reaction, as with anybody who's a part of a contract, was that it's not our problem. Your tenant's got a lease, and if he doesn't pay the rent, I'm going to sue him, which the government actually stopped under the moratorium, that no landlord can actually send in the bailiffs, and no landlords can take proceedings, or they can initiate proceedings, but they can't take proceedings for collection of rent, and rent doesn't have to be paid till January. So the first 3 months was extremely uphill, with landlords saying, what are you doing coming on the phone? Why is it my problem? It's yours. The next 3 months was landlords starting talking about deferment of rent, which is just kicking the can down the road, because it's difficult enough for tenants to actually pay for all their other outgoings while they're closed and not gaining income. And when the moratorium gets lifted, if it does get lifted, it could get lifted in January, then virtually a year's rent is got to be paid with no income having come in. And the third situation is that landlords are now beginning to cooperate, even the largest landlords. Some of them actually volunteered rent-free periods to tenants when the virus first came in, such as the Grosvenor Estate and Argent. And now they're probably in negotiation with those tenants about how they can ensure survival. And if we don't keep these tripartite relationships together, I dread to think what we're going to be going back to, because office tenants, for example, are now saying that they're only going to have people in 3 days a week, and they'll have Monday, Tuesday, Wednesday shift A, Tuesday, Wednesday, Thursday shift B, and Wednesday, Thursday, Friday shift B, shift C. And if 30% of office tenants are not going to be in the office Monday, Tuesday, Wednesday, or Friday, Thursday or Friday respectively, then the leisure industry has a capped turnover, because people won't be going for lunch, they won't be going for after work drinks in their numbers that we've been used to, and they certainly won't be going to pubs, bars and restaurants if they're 40% empty.
And David, just quickly, what kind of struggles are you hearing from businesses at the moment?
It's been a nightmare. The whole arena of lockdown, the first 3 months into the summer, was a disaster. The government helped with some cash flow in a variety of ways, both directly and through intervention, with loans, grants, tax deferrals, rent holidays, furlough schemes, restrictions on winding up orders for companies affected by the coronavirus. These initiatives, announced while most of us have been working from home, and some of us still are, have given many businesses a bit of a breathing space. But what will things look like when day-to-day business starts to operate more normally? If we get a vaccine that actually works, it is at the moment a nightmare, because all that's happening is that everybody is storing up a huge amount of debt, and eventually that debt, whatever help the government gives today, eventually that debt will come back, and bite everybody's bum when they least wanted to.
Okay. And Alex, I suppose we've been talking about saving the high street for many years, what with the rise of online and retail parks, and now we've got the pandemic. So what kind of struggles are you hearing, or even more struggles, I suppose, that you're hearing from retailers?
Well, look, I'll echo what Anthony and David have already said here, that we are in the most transformational, challenging period in the history of the high street. There's no doubt about that. But, I think one of the things that we've been really focused on doing is trying to uncover what does it take to succeed through this period. We're on a new era of the high street. We're currently in lockdown in England. And actually, what does it take to not just survive, but even thrive through this period? And so we focused a lot around research initially. We studied, with 1,500 businesses, what was it taking for them to adapt and protect and even grow their business through this period. And we've been supporting at various different levels, hundreds of others up and down the UK to navigate through this period and be as successful as they can.
So we kind of looked at a bit about government intervention there, and also talk about how tenants are struggling. So maybe if we'd move on to how, and that's why a lot of people are listening, to how tenants should kind of negotiate with their landlord. So when they're thinking of preparing for these discussions, what kind of information do they need to kind of bring to the table as part of the negotiation process? I think this might be a question for Anthony here.
Number one, transparency is key. All right. There is no point in entering a negotiation with a landlord, right, if you haven't got a problem, right? Landlords are going to want to have complete transparency with regard to your management accounts, how you've been trading in March, April, May, June, August, July, September, etc., compared with 2019 and 2018. They will want to know your cash position with regard to affordability. And they'll also want to see that if they help you, they're not just giving you a rent-free period and then you're going to pull the plug on them later. Obviously, landlords are in a difficult position because they can't actually collect the rent if you refuse to give it. And most landlords are actually clamoring for cash. There are all sorts of deals which can be done. For example, a landlord giving a 6 months rent-free period, but putting another year on the lease. Landlords looking for asset management opportunities. They might have a block date to develop the building. And as with one particular negotiation I'm handling today, the landlords have got a block date in 2026 to develop the whole building. Our client's lease expires in 2027. All right, and in consideration of bringing the lease back slightly by a year, which suits the landlords, they are prepared to cooperate. They also, if the lease is inside the Landlord and Tenant Act, have to pay statutory compensation when they refuse a new lease, so you can trade the compensation against the rent-free period. Landlords are often holding rent deposits and draw down on the rent deposit, but don't ask us to top it up again because we can't, all right, even though most leases say that they can top up the rent deposits. So there are all sorts of different ways in which landlords can get an asset management benefit out of it. But too many landlords think that they're going to, that their negotiations have to be on a break-even basis. That if they're giving something, they've got to receive something in return. And that's not the case, because the coronavirus is not discriminatory and just affecting tenants. It's affecting tenants, landlords, and bankers. And the market itself has already fallen. We might not have a market on which to judge that, but if you work on the fact that 30% of people are not going to come back to offices, there's going to be a 20% oversupply of offices, and grey space, which is plug and play space, is going to be unlettable in comparison with competition. With the current availability has gone up from 4% to 8%, but I anticipate that the availability of offices is going to be 20%. And clubs, bars and restaurants haven't got the money to pay their landlords, so where are they going to find it from, all right, unless landlords cooperate?
There should be a partnership between landlords and tenants in order to get to the right place. And for those landlords that don't recognise that, it's going to be a much more difficult process in trying to find a deal.
I would add to that that the bankers need to work with their customers, which is the landlords, to say, look, we do not want you to default on your loan. Rents are going to go up, rents are going to go down, yields are going to go up. So where a banker is given a 70% loan to value, that is not safe anymore. If rents go down by 30%, take a restaurant at 100,000 a year at 4%, it's worth 2.4 million. If the rent goes down to 70,000 a year at a 5% yield, because property is more dangerous than we anticipated it was, because we could be attacked by these things, 70,000 a year at 5% is 1.3 million. So the borrower's got 1.8 million pounds worth of borrowings and 1.3 million pounds worth of values, and then we're going to have a banking crash. And if we do not get to grips with what the government has asked us to do, which is use the moratorium to keep the relationships together, we are going to have liquidation signs all over London, all over the country, probably worse in Alex's territory in the high street. And the only way we're going to save the property market is by everybody listening to what the government is advising us to do, which is solve your problems you've got. Do not build up debt. Do not refuse to give any help to your tenants, because you will be the first at the end of a liquidation or at the end of a CVA, and that will be discussed later. But there are ways in which we can put negotiations on the tenants' foot when landlords don't cooperate, and this is part and parcel of this seminar.
So Alex, what are you hearing? So go ahead. Were you going to speak anyway? Yeah.
Yeah, no, just sort of building on what's been talked about here. I think the word partnership's absolutely key. You know, again, I'm echoing the sort of tripartite nature of this relationship here. The banks need to be at the table too. We need to find sustainable solutions that work for all parties for this to be sort of a long-term successful future that we'll want this to be. I think the nature of partnership, I think one of the things that we're seeing here, which is an increasing openness from the landlord side, and you know, one of the things we've been working really hard on from a data analytics point of view is around what historically has always been called turnover rents. So the ability for a portion of how much you pay to the landlord to be tied to the amount of top line growth or top line revenue that you're generating. Now, you know, ultimately over time, not all businesses should just be measured purely on their turnover. You know, the contribution of value of that physical space should be a little bit more complex, sophisticated than that. But ultimately, this is about partnership. And if we talk about partnership, not just using the word, but actually put it into practice, one great way of doing this is to make sure the interests are all aligned, that we all share in the risk and reward of being on the high street together. And that is landlords, tenants, and banks.
Yeah, no, it's interesting you brought that up, because there has been a lot of larger retailers move towards that model, hasn't there? I think there's been New Look and All Saints being reported in the press in the past few weeks. How feasible is that, Anthony and David? Is that a possibility that could be, you know, seen across all businesses? Obviously, it might not work for the offices, but perhaps for retailers, is that a possibility? Could we see an actual shift in the way leases are kind of created and what they're based on in the future?
There's no doubt that without, especially in the hospitality business, which is very easy to do turnover rents, and also in the retail businesses, there's no doubt that if you can't trade, you can't pay. Right? And accordingly, the turnover rents is a very, very good idea. The Crown themselves are actually offering their tenants who are in trouble turnover rents, generally restaurants, bars, clubs at 9% of turnover. We've done various deals with landlords already, right, on turnover rents, on late night venues especially, who have been the most affected because they not only had the lockdowns, but also the 10 o'clock curfew. 10 o'clock curfew, social distancing. You can't run a discotheque with social distancing. It just doesn't work. So they've had to change their operations completely. Turnover rents are the future in the retail and hospitality industry. Unfortunately, the biggest problem that landlords and bankers have is that they're working from old numbers, right? They're working from 2019 values, which were going through the roof, and they're endeavoring to maintain them as anybody would try and maintain. But if the market is crashed, and if you buy a house for £1 million and the market goes down by 30%, you're going to be the last to sell if you carry on quoting £1 million for a £700,000 house. And the answer is that the landlords who accept that the market has gone from whence it was, right? The landlords who accept it will do deals with their tenants and they will keep them there. And the landlords who use bully boy tactics and say, you've got a contract, and if you don't pay me, I'm going to sue you, they will be suing into a vacuum. And they will be the people who won't be letting their properties, and they will have the liquidation boards on them.
And it's quite scary if they threaten to sue them. What kind of legality, what kind of legal ground would tenants have then if they said they did threaten to sue them?
Well, the government at the moment has, given tenants at least breathing space up to next March. They have, I think it'll be certainly to the end of March, if not beyond. They'll give them breathing space to try and keep the business going and whatever. And the whole purpose behind the government strategy is to say, we want to keep the businesses going. So they've changed some of the insolvency laws. They've added a new feature to the insolvency laws to try and help businesses keep going. They want to keep businesses going as much as possible. But for goodness sake, I mean, you just have to walk around the city and the West End to realise that you can't keep businesses going if nobody's coming into London or into the city or into Manchester or wherever, and going to work there and working there from offices or wherever. And at the moment, nobody's really coming in. So that makes it a disaster. It's a fulfilling prophecy that doesn't do anyone any good.
So just going back to that kind of landlord and tenant negotiation, should they be bringing to the table just saying, look, these are kind of 5 things I'd like, or, these kind of some points to bring to the table when they are in discussions with them? Are these discussions happening, I suppose, are people asking, oh, should I have one over Zoom? Is it through email or doing phone calls?
We're having 6 or 7 con calls a day on Zoom and similar. All landlords are engaging with us because we are there to engage with them. We've also got landlord situations where tenants are coming to us and we're acting for the landlords and we're having to engage. And our advice to landlords is get the money in your pocket if you can, right? If a tenant is prepared to pay you 2 months rent out of 3, and you can bank it with the risk that that tenant is going to fail, you'll be a hell of a lot better off, number one, helping your tenant cover the problems. And obviously we have to see cash flows, accounts, etc. But number 2, God forbid they do go into liquidation or they do carry out a CVA or some other process, which we ought to discuss fairly shortly, then you're going to be worse off if you don't do a deal with your tenant, because if you just let the debt grow in the hope that you're going to get paid and you don't get paid, you'll get nil instead of something and you'll have an empty property.
Okay. So what should tenants do if landlords aren't budging an inch and won't entertain a conversation about a change to their lease, even in the short term? What's your kind of advice there?
In very short terms, and I can answer it in one sentence, they should come to us and David Buchler so that we can show them what to do, which we're going to discuss shortly, because there is no doubt that our most powerful weapon with regard to a non-cooperative landlord, and that's the heading of this seminar, right, is that tenants who are able to satisfy the criteria in order to propose a company voluntary arrangement are in a position to tear up their lease effectively name their own terms going forward, get rid of their debt to the landlord, and maintain their business in its existing format without very much embarrassment, because it's not a liquidation, it's not an administration, it's a voluntary arrangement to make a proposal which says, I am having difficulty and I need to use this law which was brought in by Kenneth Cork in 1984 in order to avoid liquidations, to maintain my tripartite relationship and have a crack at my business surviving in the new market that we're going into.
Brilliant. Well, this is actually David's area, isn't it, David? So can you just explain what a CVA is and the whole process? You know, there's going to be people sat here who have never heard of this. So how does this come about? How do they go through this process?
Thanks, Susie. Look, Tony is absolutely right. At the end of the day, it's all about trying to save the business. And there are too many businesses that have, at the moment, severe financial problems. They don't know quite where to turn or what to do. And they can use the legislation that exists today to try and cut down the debt, reorganize the business that they've got, and ensure that they have a new deal with the landlord, their landlord, that makes sense for their business moving forward. I start off by saying that any possibility of doing a deal with the landlord should be number one. If they can do a deal and the landlord's a willing partner and Tony's able to negotiate something, do it. But if you can't do it and you've got a landlord that's just stubborn and looking at the past, then a CVA, a creditor's voluntary arrangement, is effectively just a reorganization of the debt and a reorganization of the company. And within a CVA document, you can set your reasonable terms with your landlord as to how the lease should move on. As Alex has said, a lot of the new deals are based on turnover, and that really does make sense. And there are good grounds that Tony has mentioned about agreeing deals, you know, whether it's 8%, 9%, whatever it is. There are good grounds for agreeing deals on a turnover.
Can I just come in here for a moment and give you the reality of exactly how we work? A tenant comes to us, he's got problems, right? We go to the landlord and say he's got problems. The landlords want to see a chapter and verse on all the financials, etc. If the company has got cash flow problems, they can probably qualify for a CVA. In order to qualify for a CVA, you need 75% of those that vote. And David's going to correct me on this, he always does, which can include 50% of, up to 50% of connected creditors.
Non-connected.
Pardon?
Non-connected.
Non-connected, up to 50% of non-connected creditors to vote, all right? And in the event of you getting the CVA through, the lease is torn up, right? You follow the terms of the lease in terms of term, etc. You can propose a market rental value. The landlord is bound to accept it. He can't not accept it, with the exception of going to court and challenging that the proposal is unreasonable. So the boot's on the tenant's foot. And what we do is we get the mathematics of the we take the tenant client to David's firm. They go through all their financials. We get the mathematics that they can qualify for a CVA. And once we can qualify, we don't need to push the button. We then go back to the landlord and say, look, this negotiation is not the way it was. It's not a contract which you can enforce. We are going to be able to satisfy the mathematics of a CVA. We are going to write our own lease, which might be on a turnover rent. It might be on 50% of the rent that the tenant's paying. Whatever is affordable in the new market is the right market rent. And if you don't actually do a deal with us, we'll give you 14 days to do a deal. Otherwise, we're going to have to push the CVA button. And the date of the CVA is the date when the rent which is owed to the landlord stops. So for example, if you do a CVA on November the 10th and you owe September quarter day's rent, then you only owe from September quarter day to November. If you're up to date with the landlords with regard to paying rent, then because each vote is worth £1, if you owe him nil, his vote is worth nil, and therefore you've only got to have another debtor of £2,000 effectively for the CVA to go through. And the CVA is the ultimate tool which puts pressure on tenants, landlords, and bankers to actually find a solution towards keeping their relationship together. And even though the landlord complains of hardship under a CVA, that's the law. The law which was brought in by Kenneth Court for company voluntary arrangements was something that a landlord faced if his tenant got into difficulty when he first granted the lease. And therefore the tenants are in difficulty, and the landlords shouldn't complain that we're using trickster methodology in rearranging our relationship with them. The law entitles the tenant to rearrange the arrangement, and the law entitles the tenant, subject to him getting the qualifying votes to actually get a CVA, to write his own terms, which are reasonable commercial terms in connection with the premises which he holds. And I'd like to ask David to add just a little bit to that, because it's so important.
Yes, David, actually, I was just going to ask about the costs associated with CVAs and how long the process generally is.
Well, there's not a lot I can add to Tony's comments. He knows his stuff. He knows what he's doing. He knows what he said. The costs are not.
I've learned more from you, David.
Well, you know, you're a good listener. The costs are not that material. A number of thousands of pounds. It's not a huge amount, but it can be the difference between saving your business and not saving the business.
We've got a lot of the pros there of CVAs. Are there any kind of downsides to going through that process?
The ones which have come up, and I'll give David some of it, the ones which have come up from tenants is, I don't want to be seen to be liquidating the company, but they're not. They're using what's called a company voluntary arrangement. There's the downside that the landlord can challenge it in court, but if your proposal is reasonable, right, then the rent's going to go down. It's down to what we might say 9% of turnover, and the landlord's challenge in court might be 12% of turnover, or we might say 100,000 a year, and the landlord's challenge in court might be 120,000 a year. So there's no reputational side, because Pizza Express, Travelodge, Ask Restaurants have all done CVAs. And when landlords are actually demanding rent when the moratorium comes off, everybody's going to be doing CVAs. So we're just ahead of the game.
It's going to be a trend, unfortunately. So other than CVAs, are there any other options available to businesses?
Well, the CVA is one which enables businesses to survive. And this is all about survival. But if you can't survive, then you have to liquidate.
The CVA, let's make it clear, because I don't like leaving various options. The CVA is, right, the defence strategy against a landlord who is pushing too hard and is not listening to their tenant, is not being accommodating. And these are not times of aggravated negotiation. These are times of conciliation. And in order,
Alex, are you seeing that on the high street?
Yeah, no, pretty much what Tony was just saying there, I think, is really important. People don't want to do a CVA, let alone go into liquidation. This is not what people want to do. Particularly get away from the big nationals who potentially have too much store footprint anyway, and have done for quite a long time because of the structural changes going on around retail, and maybe, you know, the excessive aggressive expansion of some of the private equity backed restaurant groups. you know, the majority of smaller chains and smaller businesses do not want to go back down this route. And the reason this is being looked at primarily is to give some extra leverage in the negotiation so that they can get to what they believe to be a fair and equitable deal with their landlord. That's the perspective from the majority of the high street.
And so CVA could be used as a kind of tool to negotiate, really, if you kind of pose the threat of a CVA.
Yeah, it's what Tony does best. He takes you know, the documents that we'll prepare, and he will then discuss those with the landlord, and with the landlord knowing that if they don't agree a deal, there's going to be a CVA that will enforce a deal. The landlords are much more able to negotiate something more sensibly.
Okay, fantastic. And we've got some other questions coming through. So Christopher Green has asked, can the landlord turn down the 20,000 that Tony just mentioned?
Firstly, commercially speaking, landlords are so desperate to get money in the bank that whatever you offer them in rent, they're going to accept it. It takes a very, very strange landlord, Christopher, to actually turn it down. Secondly, if you're not allowed to unfairly prejudice a landlord, and I'd like David to answer that one. So a tenant owes the landlord £50,000.
Yes.
And he needs 20,000.
The answer is yes, they can turn it down if they want to, but you're only then going to have to, the landlord then is going to have to face a potential reduction in rent anyway through a CVA or a different sort of deal. But the landlord's entitled to turn down whatever they've got.
Okay, we've got another question here. What is the best way of calculating a fair rent in the current market?
There isn't a current market. That's a very good question, and it's actually one where I'm either bold or LBW or caught or stumped, right? The truthful answer, we don't know what the current market is because there isn't a market. Right?
Alex, sorry, go ahead. Yeah.
But certainly on the bar, club and leisure market, I can see reduction. The most important thing on offices is Lehman's. And in Lehman's crashed on September the 15th, 08, and I did 3 rent reviews in a building called Queensbury House, Old Burlington Street, June, September and December, either side of the Lehman's crash. June was £102 a square foot, September was £78 a square foot, and December was £68 a square foot. So Lehman's, which was only a banking crisis, not a change of heart with regard to how every single person in this country and in the world feels about business in the future. And Lehman's crashed by 32%. I do believe that the leisure market is going to crash by at least 30%, if not more, as a fair rent. And if you don't want to put a fair rent in the CVA, I mean, I would stand up in court on every central London.
Are you saying the leisure market, Tony, or the commercial market?
The leisure market at least 30%, and it may even be 50, right?
And the commercial market?
I think 20 to 30%. I know that Cushman and Wakefield put out one of these estimations today that the market hasn't dropped at all for September quarter day, and I was on the phone to one of the magazines today saying I've never seen anything like it. I mean, they must be blind, deaf and dumb as far as I'm concerned.
Okay.
I'd like to let a few buildings to their clients, let's put it that way.
Well, hopefully we've provided you with lots of advice there kind of going forward. So I'd just like to thank everyone on the panel. So thanks for Anthony, Alex and David, who's left us. If you do have any other questions, please contact the Anthony Lorenz Consultancy.
And please send it on to any friends or colleagues or people you advise, etc. We'd be very happy to take any further calls if necessary. And I suspect that we will be organising another webinar quite shortly to go into more detail about CVAs.
Excellent. Okay, thank you everyone for your time. Have a good rest of the day.
Thanks.
Bye.
Thanks.